Okay, here we go.
Yeah, you go.
We go? Okay, we're going. Okay, hi guys, welcome back. This is Wayne.
And this is Ben.
Hello. Today we are going, what are we going to be talking about today, Wayne?
We're going to be talking about incorporating your company. So we get asked a lot of questions about having a partnership and a sole trade and how that's different to being a company. And so we're going to talk over some of the benefits of incorporating your company and then also some of the drawbacks as well.
Yeah, that's right. A lot of you will be at different stages to this. So some of you may have Googled what is a company. Some of you may have been told by your accountant you need to incorporate. This is an interesting stage, isn't it? Because you'll be moving forward with your own business. And is moving forward into a company the right thing to do? Well, we can give you the pros and the cons about that. I'm trying to make this as succinct as possible. So it's going to be a 5-minute, maybe 8-minute piece. Then just give you some food for thought on that side.
Yeah, this is just a quick video to give you some of the ideas about some of the things you might think about. But actually, if you want any detail, we suggest going to your accountant because all these are going to be very specific to your situation. Mm-hmm. So there might be some reasons you want to incorporate when another company, that's not the best thing for them. So always consult your accountant, but we're just going to go over some quick ideas for you.
Yeah. The format is that I am going to be the person that has no idea about incorporation, so I'm going to be asking Wayne a few of these questions. We're going to make this quite exciting as well. Okay, this is going to be really exciting, which you don't normally get in accountancy world, but we try and do that. We're going to be doing an FA Cup style. So Wayne,
right? Okay.
We have
first up
the balls.
Right, here we go.
Here we go.
So the incorporating process, and I'm going to explain it to Ben, and then Ben's going to ask me any questions that he might have on it. So the great thing about incorporating is you have to go through a whole process of making sure your systems and controls are up to date. So that will get you to analyse your business and look at it in a new light. So there might be some things that come up which you think, well, we could improve that, and you put processes in such as Xero, QuickBooks, or something like that to help with it. So the great thing about incorporating is that it gives you a chance to look at your business again.
Okay, and what is Xero and QuickBooks?
So Xero and QuickBooks are accounting software, and they're based in the cloud, which means that they interact with your bank feeds automatically. So your bank feeds will automatically feed into Xero and QuickBooks, and it will allow you to invoice everything onto one system, and it's really easy.
Okay.
Great system to use.
Great. So I already use Xero and QuickBooks as a sole trader. So the incorporation process by becoming a company, is there different areas which I look at?
No, it's more the fact that you start to look at your company in a new light, and you might look at, for example, your systems and controls and your processes. So the things you do around your core trade and make the company just better all round.
Yeah. Okay. Great. Okay. Thanks. Next one. Here we go.
Yeah.
Here we go.
Right. Separate legal entity. So this is probably one of the key things about incorporating, guys, is that your company becomes its own legal entity, which means you're not legally responsible for anything that it does.
Okay.
I mean, there are a few exceptions. If you're a director, there's certain things you can't do, but actually most of the risk and the liability lies with the company rather than yourself. If you're in a partnership or a sole trade, then you're completely liable.
Okay. So theoretically, if I did something wrong and I was incorporated, I would be exonerated.
For example, if your company had a particularly bad debt, for example, or you racked up a massive debt which the company couldn't pay because it wasn't successful, then they wouldn't come after you personally for that. So they can only take.
So they wouldn't come after my own personal money.
Exactly. But they would be able to take the shareholding, so whatever you've put into the company, and perhaps your director's own account, but they can't do anything beyond that.
Okay.
Because the company sits here, and you sit here. It's completely separate.
So I would have greater peace of mind that my own personal risk is held in one place and the company is held in another.
Yeah,
okay,
exactly.
That's a great advantage actually.
If you're in a trade such as the motor trade and you're providing parts to BMW, for example, then that can be a great thing. Because if there's a product recall, same with food and drink, that can be incredibly expensive. So you don't want to be on the receiving end of that.
Yeah, good point. Great point. Thank you. Okay.
Right, next up, who are Accrington and Stanley playing?
Accrington Stanley? Who are they? Exactly.
Yeah, this is the FA Cup all in it. Right, so incorporating. This is the tax benefits of incorporating. So by incorporating, it allows you to structure your income in the most tax efficient way, because you're not necessarily taxed on all the profits of the company. You're only taxed when you take the profit out of the company. Okay, so as a sole trader or partnership, whatever your company makes in that year, then you suffer the tax on that, which doesn't give you the ability to plan. So you can't say, I'm going to take a certain amount of remuneration for this year because that's the most tax efficient way.
Okay.
Whereas in a company, you can do that.
Okay.
Yeah.
Yeah. Yeah. Okay.
So it might take you a little bit longer to get the money out if you're going to go up to your personal allowance of 12.5 grand and then maybe take some dividends, but it does allow you to reduce the tax bill.
So personal allowance being?
The personal allowance is the amount of income which you can earn before the government start taxing you.
Okay.
So we all have it, regardless of whether you own a company or you don't.
Yep.
But structuring your income in a certain way will allow you to make the most of it.
Okay. Okay, great.
Alright, next up.
There we go. By the way, guys, if you have any further questions, do comment below and we'll endeavour to come back to you, okay?
So next one, business reputation enhanced. Wow.
Well,
If you're a limited company, that always looks better than if you're a sole trader or partnership. I mean, that's not always the case, but people like to deal with limited companies. It just feels like a more secure transaction.
yeah.
Yeah?
Yeah. Yeah, I think so. Yeah. Yeah. I think we individually, it's the way we proposition ourselves or put ourselves out into the wider community. So whether you're a sole trader, whether you're a partnership, whether you're a company, it is that individual that makes the business. But actually, in professional terms, a company will always have that edge over any other entity when we're dealing with legal issues, when we're dealing with other corporate entities.
I think it's like a growing up thing as well. You know, a lot of the bigger companies are limited companies. So
Yeah.
when you're dealing with a limited company, it feels like they're bigger than they are. That's not always the case. I mean, there's some great partnerships and sole trades, but generally, bigger the company, they become limited.
Yeah. Yeah. Okay.
So next up,
Okay. We're still going.
going down to the last few.
Last few now.
And the away team is protect personal assets against debts and lawsuits. So this is something we touched upon earlier, and what it basically means is that if you're in a sole trader or partnership, then your personal assets can be taken from you. If you have a particularly bad debt in the company, or there's a legal dispute, which means you have to pay out, then they can take your house and your car. All that stuff is tied into one. So if you've incorporated in your limited company, then these assets remain yours. They're not company assets, so no one can come after them. They can only take up to what you've put into the company. So if you're slightly concerned, or you just want that peace of mind, or you're dealing in a particularly risky industry, then becoming limited can help you there.
Yeah. Yeah. That's a really important point to note. This is, and I think that's a really important advantage to incorporating as well.
It's definitely one of the biggest advantages there are.
Okay.
Okay.
Okay. A couple more.
So not many to go. Right, detailed reporting. So there's a lot more requirements for a company to file at Companies House. You have to do things a little bit more formally, and you have to get all the information down, and then you have to submit that to Companies House. That can be a really good thing. I mean, it can be a bad thing because it costs money, so you're going to have to hire a bookkeeper probably, or do it yourself.
Yep.
But the great thing is you get detailed reporting out of it, so then you can monitor the business and you can see exactly how well you're doing month by month, day by day, if you're using QuickBooks or Xero. And then there's other benefits to detailed reporting, such as raising capital and other things which we'll touch upon in a minute. But it basically means that you've got to get all the information down, and as a manager, then you can look at that information and then make strategic decisions for your company.
Okay. It does at the moment. This incorporation does sound like it's a lot more work, and we'll come back to that quickly right at the end with regards to the advantage versus the time element.
Yeah.
But there are big advantages to incorporating. As I said, we'll come back to that. Okay, so we go. Let's rattle through these. Wayne, let's rattle through these.
Okay, protect your brand. So being a limited company, it makes it easier for you to put IP in place. So
IP.
Protect your intellectual property. So, for
Intellectual
example, your logo,
Yep.
the way you do things, the colour schemes, that type of thing.
Yep.
If you're a limited company, it's just easier.
Okay. Perfect.
So last two.
Yeah.
Right, easier to sell. Well, people like to buy a company as opposed to a partnership or a sole trade, and obviously that's not always the case. But the thing with a company is all the assets and all the reporting, it's all tied up into one place, so you know exactly how much that company is worth, and you know exactly how well it's doing. If you have a partnership or a sole trade, there's all sorts of grey areas. I mean, if you're putting from your house, is your house part of the value of the company?
Yeah.
Is your car part of the value of the company? So people like to buy limited companies, and also because you've got shareholdings, you can buy bits of the limited company rather than just buying the whole thing.
Yeah, and of course there's a lot more visibility as well with a company. And you can look on Companies House,
Excellent,
etc.
yeah,
And again,
exactly.
something we can touch on in another session. Right, 2 more.
Oh,
What we got? What's
right,
going on?
transfer of ownership. So again, this is the point I mentioned a minute ago. You can value the company quite easily, which makes it a lot easier to transfer down to spouses, for example.
Yeah.
You know, your sons, your daughters, that type of thing. It's very easy to value the company, easy to transfer. There's a few things you need to think about in terms of inheritance tax, capital gains, and income tax. So there's sort of things you would need to chat to your accountant if you were going to gift shares in the company.
Yeah.
But then there's also benefits. So for example, inheritance tax, because it's a company asset and the government are trying to promote entrepreneurialism, there's a relief for it. So you're not going to get charged inheritance tax likely on transferring assets now.
Okay. And we'll go into that deeper in another episode. I would expect on that as well.
Yeah.
And it all depends on what type of businessman you are, but you know, succession in a lot of the businesses that we work with is key and valuable. And you know, making it easier to sell, making it easier to transfer down to who you want to continue on the business. I mean, that's a real buzz point.
Yeah, I mean, owner-managed businesses. You know, you bring in the family and the next generation's coming through.
Yeah.
That type of thing. Even in, you know, if you have a really good employee and you want to give them some shares in the company, then it's easy.
It's never too early to start thinking about that, I find as well. Okay, last one. Who's coming out?
Okay, right. So last one is ability to raise capital. So this is, for example, if you're going to go to your bank, they're going to require certain information from you. So like I said earlier, in terms of you getting your finances in place, in terms of your reporting and things like that, the bank want to see, you know, cash flow projections and P&L, how you're doing right now. So P&L, I know that's quite a technical term.
P&L? What's P&L?
So your sales less your cost of sales, you know, any cost that you have. So your profit for the year.
Profit and loss. Yeah.
The bank will want to see that. They want to see cash flow forecast, so what your cash position is going to look like in 5-6 months' time, for example. And again, the legitimacy of having a company can help with a bank as well. So, for example, you can set up a bank account with your company, and then you can get a bit of a credit rating going the more you use it. So, there we are.
Okay.
That's the benefits of incorporating.
Yeah, so hopefully this has given you a quick shot at where we are, 12 minutes. So it's giving you a 12-minute snapshot. Obviously, as we said at the very beginning, this is only a snapshot of what Wayne and myself are trying to make it easy for you guys to understand. But if you have questions, do ask them on our link. Or, you know, the best place to go is to your professional. That's what they're there for. So by all means, ask them questions. They should be very happy to help.
Yeah, make sure you do that, guys, because you know, we've touched upon a few things, but actually it completely depends on your personal circumstances. So there's a few things for you to think about, but definitely consult your accountant.
Yeah, and weigh up the value for money as well, because incorporation does cost you more money. Being a company does cost you more money with all the administration, etc. But there are huge advantages, which I think Wayne you've explained very well in a very interesting FA Cup style. Should we do that one again?
Yeah,
do you think that works? Who won? Who won? I don't know. It wasn't Accrington Stanley.
It might have been Arsenal.
It wasn't. It wasn't. It wasn't
It's
Arsenal.
never Arsenal.
Okay, thanks guys. Nice to see you.
Have a good one. Thanks.
Okay, bye.